Good afternoon and welcome everyone to a very special options education session. My name is Tony Zhang. I'm a chief strategist here at OptionsPlay. And the reason I'm saying that this is a very special session is because we are going to focus on how we can revolutionize and completely change your options trading forever with the tools that we have recently partnered with Stockcharts.com on, and bringing you some of the tools that we have been using almost on a daily basis for the last 9 months or so since this partnership has started. And this is a tool that I cannot live without with regards to options trading. And I'm really excited to show everyone here how this can potentially completely change the way that you look at options trading and ensure that you are always looking at the best possible trading opportunities in the market every single time you are looking for an idea. Now, before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that I'll be using as example purposes during today's session. But my primary goal today is to show you how OptionsPlay can automate the best yielding opportunities in the market that are personalized to you in real time so that you can find the best trading opportunities in the market. Now, we're going to go over two things: the Strategy Center, which is a real-time scanner for personalized option strategies, integrated directly into the Stockcharts technical scanning tools. This is one of the most powerful tools from a scanning perspective, which is why I'm really excited that we partnered with Stockcharts.com on this, so that you can get the best of both worlds. You can get their state-of-the-art technical analysis screening tools as well as charting tools, and merge it with our personalized option strategies, so you are always seeking the best possible opportunities in the market that is personalized to you. And then we're going to look at the Strategy Explorer to see how you can find instant optimized strategies with analysis and education alongside of ACP and SharpCharts. So a lot of things we're going to cover during today's session. So let's go ahead and get started. So the first thing what I want to show you is automation using the OptionsPlay Strategy Center. This is what is going to revolutionize and change the way you look at options trading forever going forward. And like I said, more importantly, it's going to ensure that you are always trading the best possible opportunities. Now, this integration that I'm going to show you today is $40 a month in addition to your Stockcharts.com membership. So I just want to be very transparent and upfront about the cost of the tools that I'm going to be showing you during today's session. But what I want to do is spend the rest of this time showing you how you can potentially make the payment for the first month on your first trade using this particular tool. So that I want to make sure that we bring enough value to you on your first trade to cover at least your first month of the subscription, if not multiple months from just your first trade. So I want to make sure that I spend enough time today and show you how you can do that with the tools that we have available here at Stockcharts.com. So at the core of the Strategy Center are these real-time personalized strategies. So what I want to do is I want to spend a little bit of time showing you kind of what the current process looks like for a lot of traders and how this can change the way you look at options trading. So let's start and take a look at what I think most people see in terms of their trading strategy. Let's start with talking a little bit about what your existing workflow typically looks like, right? And this is kind of what I've been doing for years prior to this partnership that we had with Stockcharts.com, which was I had scanning tools, and Stockcharts.com has some fantastic scanning tools. I'm using the advanced scan workbench here in this particular case, where you can write almost anything that you can possibly imagine under the sun, and they have all these predefined scans and sample scans that you can run. So the sample scan library, I think, is fantastic as a great way to help you get some inspiration of different types of scans. A lot of my scans actually come from the predefined scans or the sample scan library, where I've kind of taken ideas and made it my own. And the advanced scan engine basically allows you to take these ideas, write out your own scan, and then run these particular scans. So here's a scan that I ran. This is my 2-month outperformance scan. I'm looking for stocks that have outperformed the S&P 500 for the last 2 months. And these are kind of the starting points of some of the best trades that I have found in the last 9 months. And what I love about Stockcharts is that I'm not just getting a list, right? Because a lot of scans and screening tools, you get a list that looks like this, which means that I have to then take the symbol, manually plug it into a charting system to look at it, look at the fundamentals, see if I like it. Then I go back to this list, I take the next symbol, I plug it in to the next symbol. By the time it takes me to go through 10 ideas, it's probably taken me 20 minutes to go through, all those different ideas. What I love about Stockcharts is the SharpCharts, because when I run a scan and I have 10 charts, I can basically scroll through all 10 charts, and within a couple of seconds, I have a pretty good sense visually which one out of these 10 scans which one of these 10 stocks I really like the chart setup for. So Delta is one that I really like. This is a stock that hasn't run a whole lot. It's recently just broken out above $54, and I'm looking potentially for further upside. So, usually what I'm doing is I basically run a scan, I go through my chart list, and then most of you are probably familiar with, once you have an idea of a stock, right? So let's say it's Delta that I really like. I plug my symbol into an options chain, and then I'm off to looking for an option strategy, right? So I'm bullish on this particular stock. I have to take a look at a specific strategy. Then I have to pick an expiration date. Then I have to pick a strike price. And there's a fair amount of work going through the options chains to find the optimal strategy. And I have to do this for every single symbol that I like. So sometimes if I have more than 10 ideas, it could take me quite a bit of time to look through all the different charts, pull up an options chain, see what strategy I like, pick the expiration date, pick the strike price, do some analysis. If I don't like it, go back, pick a different strike, pick a different expiration date, pick a different strategy. Most of you are probably familiar with this workflow if you are trading options today. And it's just incredibly inefficient, right? Meaning a lot of times when I get to the point where I'm looking at an option strategy, sometimes I realize, I can't quite find an option strategy that I really love. So I'm going back to square one. I'm looking at different symbols. I'm saying, okay, maybe Delta doesn't work. Let me look at Fastenal. Then I go to the options chains for Fastenal. And, by the time I do this, I really haven't had the ability to go through all 10 opportunities, right? Just because I don't have time to go through 10 options chains to see if I'm trading kind of the best possible opportunities. And that's really what bugged me in terms of my current workflow. And we wanted to build a better way of doing things. And that is the Strategy Center. The Strategy Center tries to automate basically everything I just showed you in under 2 seconds, and ranks every single opportunity or every single idea that I have based on the option strategy that I like to trade. So I want to walk you through that here in 1 second. So the OptionsPlay Strategy Center is something that's directly integrated into your Stockcharts membership. And with the with the OptionsPlay Strategy Center, you can use predefined scans that we have built for you. So we have 6 scans that are pre-built for you. We have bullish and bearish trend following, we have bullish and bearish counter trend, and we have bullish and bearish outperform and underperform. So these are basically different ways that you can scan the markets from a technical analysis perspective, because ultimately technical strategies fall into one of these 3 categories. You're either looking for stocks that are trending in one direction, you want to follow the trend, or you're looking for stocks that are reversing their current trend from bullish to bearish or bearish to bullish, or you're looking for stocks that are outperforming or underperforming the overall market, right? Those are kind of your core option or core technical strategies. So what we built are these pre-built scans for you. And let's say we're looking at the bullish trend following scan. As you can see, there are 17 stocks that meet that particular scan for today. But like I said, you can't really go through 17 different option chains. So even if you've gone through all 17 charts, and let's say you like all 17 charts, to go through 17 options chains would take you quite a bit of time. So chances are you don't go through all of it. You kind of just eyeball,
the stocks that you're familiar with, the stocks that you think that you can find an option strategy on, but ultimately you don't know if you've kind of looked at everything. So the Strategy Center, what we're doing is we basically take any list of stocks, and you can use either a pre-built scan that we've built for you, or you can use your own chart list. And I'll show you how you can run your own scans and have it pre-populate a chart list for you, because that's what I do, right? I have all these scans that I've built, and I basically have it update my chart list every single day. So it's all of these are basically my custom scans that I have built, that I can basically merge with any option strategy, with any custom parameters for that strategy. So for example, if I'm looking at just buying call options, let's say I like to go out 30 days to buy my call options, and maybe I like to be pretty aggressive with my strike prices, meaning I like to buy out of the money call options. I can basically update these 17 stocks with buying 30-day out of the money call options, and basically have this list of stocks ranked for me based on which ones have the cheapest call options to buy. And that means that I no longer ever have to pull up an options chain, find the 30-day option, look at what the out of the money call options cost, do some analysis and see if it makes sense for this particular stock. I basically have done all of that in under 2 seconds for every single stock on my list, and it's ranked for me based on which options have the most expensive, the cheapest call options, all the way down to which ones have the least expensive or the most expensive call options. So the ones at the top are the ones that are most attractive to me because those call options are relatively inexpensive, and the ones at the bottom are the ones that are least attractive to me because those call options are very expensive. So what this means is that I no longer have to do all of this work looking through different charts, looking at options chains. It automatically does the work for me. And you can use any of the options supported option strategies. So for example, if let's say you like to buy debit spreads instead of buying call options, and let's say you like to use 45-day conservative debit spreads, and you can even choose what your maximum risk tolerance is, well, we will update this based on your option strategy. So now, as you can see, let's go to 30 days, for example. Let's do 30 days. And now, as you can see, there are more choices because the 30-day is a monthly expiration. So now Lemonade gives me the best risk to reward ratio if I'm trading a debit spread. So for $2,300 worth of risk, I can potentially make $4,200, versus if I look at this India INDA, I'm risking $2,400 to only make $1,600. So my risk to reward, as you can see on INDA, is much worse than if I were to buy a debit spread on Lemonade, right? So basically, this does all of the work for me no matter what strategy you trade, especially when you're trading multi-leg strategies. This saves you tons and tons of time, hours and hours of time. Because if let's say you like to sell credit spreads, well, basically you can update this looking at selling credit spreads. Let's look at 30 days again, because again, the 45-day option, there doesn't seem to be a whole lot available. Let's say we sell a 30-day put credit spreads. As you can see, Lemonade, again, gives me the best risk reward ratios. It doesn't matter whether I'm buying debit spreads or selling credit spreads, I'm going to get the best risk reward on Lemonade versus some of the other names. As you can see, let's say we look at Zscaler, right? So for $2,100 that I'm risking, I can only make $870 versus in Lemonade, if I risk $2,400, I can make around $1,900. So the risk reward is far better in Lemonade than it is on Zscaler. But I wouldn't have known that on Zscaler until I've pulled up the options chain, looked for my 30-day credit spread, figured out what strike prices I want to choose, then looked at the risk to reward ratio. That takes me hours of time to go through this list of stocks and figure out which one has the best risk reward ratio. This does it for me in under 2 seconds. So this is really kind of what has completely changed the game with regards to how you can find option strategies that make sense for the stocks that you like. And number 2, make sure that you leave no stone unturned, because there's a chance that you wouldn't have looked at Lemonade on this list of 17 stocks. Because chances are what I do is I just look for stocks that I'm familiar with: UPS, First Solar, CrowdStrike, Qualcomm. Those are the ones that I'm looking at first. If Lemonade's a company that I'm not as familiar with, that I don't look at every single day, I might skip that, right? And I may have missed out on this great trading opportunity that, and I probably may have only looked at United Parcel Service, which gives me a good risk to reward ratio, but not the best risk to reward ratio. This basically ensures that across the stocks that you like, when you're trading options on them, you are trading the ones with the best possible risk reward skewed in your favor every single time, because we're doing it in under 2 seconds, and it takes no time for you to uncover these possible opportunities. Okay. Now, you can do it for any of our pre-built scans, or you can build it for any of your scans. So I have all of these scans that I've built myself. So for example, I have my buy list scan. This is a scan that I've built, using the tools available here at Stockcharts. And let's say I want to just look at buying call options on the stocks in my buy list. So I can basically quickly look at, okay, if I buy 30-day aggressive calls on this buy list, Bath & Body Works has the cheapest call options today. Moderna has the most expensive call options to buy. That gives me a pretty good understanding as if I'm looking at buying call options, where do I want to spend a little bit of time researching some of these particular stocks? JP Morgan Chase, Ulta Beauty, Bath & Body Works, these all have relatively inexpensive options compared to the rest of the name. Or if, let's say, I'm looking at selling credit spreads, I can basically quickly make the preferences that I have for any of these strategies, click on update, and now I've looked at all 16 different stocks on my buy list for which ones gives me the best risk reward ratio. So Moderna actually in this particular case gives me the best risk reward ratio, which makes sense. When the options are really expensive, they're really, buying call options doesn't make sense, but selling put options makes a lot of sense because I can collect a lot of premium, right? So, this basically bubbles up the best possible trading opportunities every single time when you are trading options, and it does it in under 2 seconds so that you get this information in real time. I cannot stress enough how important and how useful this particular tool has been for me, and I hope that you guys can see some value here in this as well. But my promise to you was I want to show you how you can make the cost of this subscription in your first trade without taking any additional risk in your portfolio. So what I suggest is you take you have a list of stocks that you currently hold in your portfolio. You upload it as a chart list into Stockcharts. And what we want to do is we want to look at selling cover calls. And you can use the default settings for cover calls because that is our recommended starting point when you're selling cover calls, which is 45-day conservative cover calls. Remember, cover calls is the only option strategy that does not add additional risk to your portfolio. So my promise was to show you how you can pay for your first month, if not multiple months of your subscription for this OptionsPlay add-on in your first trade. And the best way to do that is to look at selling cover calls on your existing portfolio. So what we're doing is we're just taking your existing equity portfolio, whether stocks or ETFs that you own, you enter those stocks as a chart list, select cover call, and what we're going to do is we're going to look at where we can generate income, right? And I'll even look at kind of some of the lowest price stocks. Look at Moderna, $32 stock. So if you own 100 shares of Moderna, that's about $3,200. That's going to generate $58 in income for you in the next 45 days for every 100 shares that you own. So $58, that will cover your first month of your OptionsPlay subscription. And you're doing this without adding additional risk to your portfolio. Moderna is currently trading at $32. This is selling a $43 cover call. What that means is that in the next 45 days, if Moderna stays below $43, you're going to keep your $58 and you keep your Moderna stock. If Moderna stock is above $43, the stock gets basically called away, which means that you sell your stock at $43 and you keep your $58 in income that you collected. But let's just put that into context. If the stock goes from 43 and it's currently trading at 32, that's an $11 increase divided by $32. That means the stock has to rally 35% in the next 45 days if the stock gets called away. So think about that, right? A lot of people, tell me, like, I don't want my stock being called away. And I always say, having your stock called away is a great thing, because what that means is that you've made a huge return on your stock that you've earned. If I told you that a stock that you own today is going to be up 35% in the next 45 days, would you be pretty happy? I'd say most people would say yes. And that is the scenario at which your stock could get called away. Regardless of whether it gets called away or not, you earn $58 worth of income. So that will in itself pay for 1 month's subscription. And as you can see, the stock that pays the least amount in terms of dollar amount is Bath and Body Works. And that will earn you 40 cents or $40 in income from selling a cover call. That will cover 1 month, right? Crocs, $178 worth of income. That will cover about 4 months of your OptionsPlay subscription. So as you can see, if you have multiple stocks in this particular list, you can easily generate a few $100s worth of income, which should cover, nearly a year's worth of subscription in your first 45 days. But like I said, I'm trying to be super conservative, and I'm just trying to cover 1 month of your OptionsPlay subscription by selling the first cover call on your subscription. And this is really where I think you guys can see a lot of value in what we offer here. I'm showing you what you can do from the trading perspective, from your speculative perspective, but from an income generating perspective, you can generate a ton of income from this particular tool without adding additional risk to your portfolio. And that's what a cover call does. Every other strategy that we see here on the list, you have to take on some risk in order to either generate income or to potentially earn those profits. But with cover calls, you don't take on any additional risk. And that's why I use this as a way to help you pay for your OptionsPlay subscription so that you can use it for all the other tools or all the other purposes that you can use this particular tool for. Okay. And, we do monthly trainings on this tool as well, right? So if you're a subscriber, there's a lot of tools that I will rather a lot of use cases that I walk you through in terms of, how I set up my own scans. Like we have, and these are all pre-recorded as well. So once you become a member, you can actually watch those previous recordings of specifically, how to use all of these different option strategies. If you're not familiar with all of them, how to set up your own scans into a watch list or chart list. These are all things that I've already pre-recorded sessions on and have educational sessions that you have access to as soon as you subscribe to the OptionsPlay add-on. But at the core of it is the Strategy Center. I use the Strategy Center on a daily basis. I basically look for stocks that are, depending on whether I'm bullish or bearish in the markets. These days I'm pretty bullish. So what I'll look at is, what stocks are outperforming. Then I'll look at kind of, potentially buying debit spreads on those stocks, and be able to look at kind of opportunities for buying some debit spreads and where I'm going to be able to generate the most premium, right? Where I'm going to get the best risk reward. Fastenal and Delta Airlines both give me effectively what is 2-to-1 risk reward ratio. For $2,300 that I'm risking, I can make $4,600 on Delta. For $2,500 that I'm risking, I can make $5,000 on Fastenal. So these are kind of some of the best performing opportunities in the market using option strategies. And this way I can identify these very, very quickly using the OptionsPlay tool. Okay. And this means that I no longer have to pull up options chains. I no longer have to screen for strategies. I don't have to pick expiration dates and strike prices. This does all of that work for me in under 2 seconds. And I know every single time I find an opportunity with this tool, I know that I'm trading the best opportunity because I see every single one on the list, and I've gone through and I make sure that I validate that I'm trading the best possible opportunities, and I don't have to pull up options chains after options chains to see if I'm trading the best possible opportunity. Okay, so that covers kind of what I wanted to show you with regards to the Strategy Center. But you can also integrate this. You can also see this within your SharpCharts and ACP integration. So I'll show that to you real quick. So let's say I'm looking at Delta Airlines here on my SharpCharts. I'm a big fan of SharpCharts. I know many of you are are avid users of SharpCharts. It seems a little old school, but I really love it. You know, I like this breakout here on Delta. This was the earnings report that came out better than expected. The stock has consolidated a little bit since that earnings report. I think there's further upside here. We see that it's outperformed the S&P 500. So not only has it broke out on an absolute basis, it's also broken out on a relative basis. So really all the things that I like to see. And you know, like I said, traditionally you look at an options chain that looks like this, right? So if you're looking at Delta and you're saying to yourself, oh, I think it's going to go from, you know, $56 to, let's say, $66, then you have to basically use the options chain to find, you know, okay, maybe I might buy a 55 and then sell a 62.5, or buy a 55 and sell a 65. You have to do all of this kind of work figuring out which option strategy to trade. Well, that's kind of where the OptionsPlay tool comes into play, because what this tool will do is actually automatically structure the 3 strategies that make sense for a bullish view here on Delta. And you can always say, you know what, I disagree with this view. I think that this breakout is a fake. I think it's going to fall back down. So maybe you can select I'm bearish, and now we'll show you 3 bearish strategies. But basically the tool is designed so that you don't have to pull up an options chain. You can just say, I'm bullish, I'm bearish, and it will present strategies with pre-selected expiration dates and strike prices based on the same way that the Strategy Center selects kind of expiration dates and strike prices for you. So whatever strategy you choose, we will automatically select a time frame and risk profile for you. Those are based on years and years of back testing of these specific strategies to figure out what are the optimal expiration dates and strike prices. And we've already pre-built that into the Strategy Center, right? So for example, if you select long calls, it will select 30-day balanced. You select cover calls, it'll select 45-day conservative. You select bull call spread, it'll collect 60-day balance. You sell put spreads, it'll do 45-day aggressive. It's all based on, you know, pre-built research that we have been doing for years and years on these specific strategies. So you're already kind of getting the best starting points for all of these strategies. But the Explorer basically takes that and instills those best practices in your views. So for example, if you're bullish, we'll select kind of the appropriate expiration date and strike prices for you. If right now you believe that the implied volatility of the option is incredibly high and you want to take advantage of that, we'll look at selling put spreads or call spreads or straddles. So we cover a wide variety of strategies depending on your outlook for the specific stock, and it gives you the information that you need to make that trading decision. So let's go back to our bullish view here for Delta. Let's say I think it's going to rally back up to 65. Well, if I bought the September 55 call, that will cost me $440. If I bought the September 65 call vertical, that's going to cost me $348 or $350. Well, you know, how are these strategies going to perform, right? So what happens if Delta reaches $65? If it does, I'm looking at a $560 profit or 127% return on the call option. That sounds pretty good. If I bought the debit spread, I'm looking at a $652 profit or 187% return. As you can see, these two numbers are pretty different, and it's pretty clear which one is potentially better. On the flip side, what if I'm wrong? What if I take a bullish position and Delta gets right back into the trading range? What happens if it trades back down to, let's say, $48? Well, here I'm risking $440. Here I'm only risking $348. So do I want the strategy that risks more to potentially make less, or do I want the one that risks less to make more? I think it's very clear to everyone. But that's really what the OptionsPlay score is designed to do, is to tell you where you're going to potentially risk less to make more, and when you're comparing strategies side by side. So it's very clear the strategy on the right, the vertical spread, gives me a better risk to reward ratio, which is why it has the higher OptionsPlay score, so that you don't have to do all the math yourself. You can do the math, right? All the numbers are here if you want to do the math, but a lot of people struggle with doing the math. This basically gives you a single number that's color-coded, so it's really easy to see and understand which one has a better expected outcome versus other strategies when you compare it side by side. So you have this in your SharpCharts, and you also have it inside of ACP. So in ACP, you have a section here at the very bottom called options. And when you click on that, you will see an options chain, which is your default view when you're looking at a strategy. But you can also pull up the OptionsPlay widget the same way we did with the other one. Let's look at Delta. And as you can see, when you're looking at this, you can pull up your ACP. I'll change my screen layout a little bit easier so it's easier so we can see kind of the chart with the screens as well, so that you can kind of use this in conjunction with each other the same way we were looking at it before. We want this to be able to quickly show you kind of the different strategies on this. And you can just, click on a specific symbol here on the left, and it will change the chart and the OptionsPlay widget here at the bottom. So this is all designed to help you quickly. So it really just depends on what your preferences are for which charting package. Some people like ACP, some people like SharpCharts. I am a user of SharpCharts, so I'm a big fan of that. So both integrations are available in both of these. So a question about short puts, which is a cash secured put. Now, the thing about a cash secured put is you're going to have to, expand your max risk, right? Because cash secured put is equivalent to buying 100 shares. So for example, you would have to expand your max risk a lot of times to see the cash secured put. Overall, that is what the OptionsPlay add-on gives you here at Stockcharts.com. At the core of it is the Strategy Center. It's an incredibly powerful tool that allows you to take any list of securities, whether you're using the pre-built scans that we built for you or your chart list. And like I said, I highly recommend for those of you that have not used the advanced scan workbench to take a look at it. Use the sample scan library. It's a great place to start in terms of giving you some inspiration of trade ideas. For example, outperforming the markets, for the last 3 months is a really good starting point as a scan. Now you can add your own things or filters on top of it, and then once you kind of built your scans, right? You can schedule your scans to basically create a watch list or a chart list every single morning or every single day after the close. So I have all of these kind of scans that I basically have automated so that every single day when the market opens, or a lot of them are actually based on market close, basically runs that scan and updates my chart list so that when I'm using my strategies, when I'm using the Strategy Center, I always have the most updated stocks in my thing. So if I'm looking at stocks that are outperforming the last two months, right, I just have to pull up that watch list, and that always has the most latest, all the stocks that have met that particular criteria, at the open today or as of last night's close. And I'm basically, I don't have to run my scans manually, then run the Strategy Center. Everything is basically pre-built for me so that I can just immediately say, okay, let me look at, selling some put spreads. Let me look at this particular list of stocks. If I want to sell put spreads, Delta Airlines gives me the best risk to reward ratio. I might go with that since I also happen to really like that particular chart. So now I've kind of done my research, I've done my work, and I've done it in under just a few seconds rather than the hours that it would take me to manually do that work. So I hope that for those of you that trade options, you see a lot of value in that, because it's going to, number one, save you a ton of time, but more importantly, it's going to make sure that every single time you trade, you're trading the best possible opportunity. Because you're just not going to look through all of these options chains and look through all of these opportunities manually, right? So maybe the first one you look at was Hilton. You looked at the risk reward. You say, okay, that's pretty good, and you traded it, but you didn't notice that, you didn't realize that Delta has a far better risk reward, right? You just don't know that until you pull up the options chain, look at the option strategy, and actually have to remember what the risk reward on Delta is when you're looking at Hilton, and remember, oh, you know what? Delta gave me a better one. Let me trade Delta, right? So there's just so much manual work that's required to do this. If you were doing this by yourself, this basically automates it and ensures that you are trading the best possible opportunity every single time. And that alone, in my opinion, is worth well more than the $40 a month that this offers. But on top of that, like I said, if you put in your list of stocks that you own, for example, if I put in this undervalued list of stocks, let's assume for a second that that's a list of stocks that I own. when I run a cover call screen on that, I can easily identify where I can generate enough premium to pay for this service in just my first trade without taking on any additional risk. Okay, so that covers what I wanted to share with you here today. Like I said, this is an add-on for $40 a month. You can point your phone to that QR code in order to sign up for this particular add-on. This is something that we've had this integration with Stockcharts for about 9 months now. And like I said, this is something that I have used on a nearly daily basis because, we built, I'll be honest, we built this sort of for selfish reasons. We built it for ourselves as traders. Now you guys get to use the same tools that we use as professionals trying to find the best ideas in the world. When I'm on CNBC and they ask me, what do I want to talk about? The first place I look at is Stockcharts. I look at my strategy center. I screen for the best technical and options, technical ideas. But those technical ideas are useless if I can't find a great options trade on the back of it, which is why I make sure that the strategy center, I use the strategy center because it lets me know that I can also find a not only a reasonable option strategy, but an excellent option strategy on the stocks that I like from a technical perspective. And when you can merge the two, that's really when I've found substantially better success in my options trading. And at the same time, I'm saving myself a ton of time. So with that covers what I wanted to share with you here today. What I'll do is I'll open this up for Q&A. There's a Q&A window at the bottom of your screen. If you can type your questions into the Q&A window, I will try to answer as many questions as I have time for before I have to sign off today. I'm a new subscriber and I see that the high options play scores recommended under, say, bullish or bearish trend / counter trend and outperformance have very, very low volume. So how do we take advantage under those circumstances? Great question. So first of all, volume doesn't mean much because, option contracts get listed all the time, right? I don't know. Let's look at this, right? This is saying Moderna, the $43 call options have one contract in terms of volume and one contract in terms of open interest. But let's just look at Moderna real quick. So Moderna has traded 3.5 million shares today already, right? So this stock is plenty liquid. There's no, as a retail trader, you're never going to, even touch anywhere close to, let's call it, let's just say this thing trades 6 million shares today, right? Your 10 contracts, 20 contracts, 30 contracts, that represents, we're talking about a couple of thousand shares worth of the stock. This thing trades 6 million contracts a day. So it doesn't matter that the open interest is one contract, right? And keep in mind that, when we're looking at the August 29th, that's a weekly options that expires in 45 days. That contract was listed just a couple of days ago. You wouldn't expect a lot of volume on something or open interest on something that was listed a couple of days ago. It doesn't mean that it's not liquid. It just means that it was just listed. That's why it doesn't have a lot of open interest or volume. So keep that in mind. Open interest and volume is really not a good gauge for liquidity. What's a far better gauge for liquidity is the size of the bid-ask spread, right? So 49 cents by 65 cents, not a small spread, but not a huge spread, right? You want to avoid things that are trading at $1 by $3. Those are the things that you're going to avoid. But we've already pre-filtered those things out for you. Anything that you're going to see on the strategy center has already filtered out stocks that we consider as not liquid from an options trading perspective, right? So everything on this list we're basically saying is liquid from an options trading perspective. Let's look at block, right? You see a volume of 5 contracts, open interest of 5. But let's look at kind of what block XYZ. How many shares has block traded today? It's traded 2.8 million shares today. So call it the stock will trade 5 million shares. So if you're trying to sell 3 contracts of a cover call, that's 300 shares, but this thing's traded 5 million shares today. Your order is a very, very, very small percentage of the daily float. which means that liquidity is not an issue. You know, that's what market makers are there for. They provide liquidity. You know, don't be afraid of interacting with something with low open interest and volume. This is a question that I get a lot from retail traders, but I can't tell you enough how volume and open interest is not a good gauge for liquidity. The bid-ask spread is a much better one. Can this use for TSX stocks? Currently, the answer is no, but we are currently looking at potentially adding Canadian stocks in the future. This options play also include leaps. So, you know, we go out 90 days here right now with the strategy center. You know, we can easily expand the number of days. So if you guys feel strongly about needing more support for longer dated options, we can easily add it. You do have access to it on your strategy explorer, right? So you can modify this and look at any expiration date, right? So you can go all the way out to, you know, as you can see, Coca-Cola list all the way out to January 2027, right? So you can look at every single options expiration on the Explorer. But on the Strategy Center, currently we only go out to 90 days because, you know, something like about 90 days, probably about 95% of all, probably close to 98% of all options volume is traded in 90 days or less. A very few percentage of options are traded in 90 days or higher. So, which is why we kind of kept it at 90 days. But, you know, if you're a subscriber and you need more, let us know. We're happy to add more expirations. Currently, you can't export these into Schwab. But again, you know, these are some of the things that we're looking for in terms of feedback, because, you know, Schwab is a brokerage firm that does have trading integration that we could potentially build in the future. How do you explain Ivy rank and how do you use it? Great question. So the question is, what is Ivy rank? Which is one of the columns here. Ivy rank is telling you how cheap or expensive the options are relative to where it's traded over the past year. It's looking at implied volatility, and it's looking at, so if you see an Ivy rank of 0, that means the option is the cheapest it's ever been in the past 52 weeks. If you see an Ivy rank of 100, that means it's the most expensive it's been over the last 52 weeks. If you see an Ivy rank of 50, that means it's dead center between the highest and lowest it's ever been over the past 52 weeks. So it's a really easy gauge from 0 to 100 to give you a good sense for whether options are cheap or expensive at the moment. At the moment, we do not support index options with this particular tool. So if you want to trade, you can only trade SPY, QQQ if you're looking to trade the indices. What is the minimum options play score that you would feel is acceptable to do a trade? It's a really good question. The answer is that there isn't a minimum, right? The question is really how convicted are you on the stock itself. The more convicted you are on the stock, the less the options play score matters. Meaning, what I mean by that is, let's say you're convinced that NVIDIA is going from 170 to 250, right? It doesn't matter that options are kind of expensive and the options play score is cheap. The options play score is low. If you think the stock's going to go higher, call options will make you money. It's just a matter of how much money will it make you, right? If the options are really expensive, you're going to make less money, but you're still going to make money, right? If you're convinced that the stock is going to move higher. So it's not that there's a minimum score that you want. It's a matter of, you know, if you're not super convinced on the underlying stock, then options play scores that have a low score generally are the ones that you're going to avoid. But like I said, you know, look at some of the rare earth stocks like MP. You know, this is a stock that's up, you know, a few $100% in the last year, right? You know, they just signed a new $500 million contract with Apple today after getting, the Department of Defense grant, you know, last week. So everything seems to be really pointing, you know, high for this particular stock. And let's say you're convinced this stock is going to be the next, you know, rare earth magnet conglomerate, and it's going to go from 59 to 100. You know, call options really look pretty terrible on this right now. But if you're convinced the stock is heading higher, right, it doesn't matter that call options are really expensive. You know, you're going to buy it anyway, right? So it's a matter of conviction, in my opinion, rather than a specific minimum. Do I have to own an option for this to work? Not at all. Not at all. You don't need to own any options for this to work. For those of you asking about go, no go, if you're a subscriber to it, you can build your own scans in the pre-built scans and then have it run, have it overwrite a chart list. I don't work in options trading due to religious restrictions. Let me know what opportunities I have, like intraday or momentum trading in stocks. If you don't trade options, then I don't know that this is the right solution for you. This is really built specifically for options traders. You could use, if you could use it just for our trade ideas, right? So within the strategy center, for example, our trend following scans, our counter trend scans, and our outperform and underperform scans, you can use these as equity ideas, right? You can say, these are all ideas that are, have triggered a buy signal today from a trend following perspective. These are all the stocks that have generated a buy signal from a counter trend perspective. And these are all the stocks that are outperforming the market. And you can use those as trade ideas for equities if you're not trading options. So that is always a possibility. In situations where there's a widespread and low volume, there's low liquidity. If you submit an order at the midpoint, it's unlikely to get accepted. In general, what are your tips to get an offer accepted by the market maker? Great question. Here's my advice to you is that if you are placing an order at the midpoint, and generally speaking, if I place an order at the midpoint, it doesn't get filled, I'll start moving it a couple of pennies off that midpoint, right? So let's say something, the midpoint's at $1. I put it in, it doesn't get filled. I'll move that to $1.01, $1.02, $1.03. I work at every single penny. I try to get the best possible price. But if let's say I'm moving it by 10 cents, like $1, and I'm at $1.10 and still not getting filled, then I usually just walk away. It's not, meaning the market maker is not trying to really make a market for retail in that particular name or that particular stock, and it's just not worth trading, right? So if I can't get filled within a few cents off of the midpoint, I'm not trading it. I generally only trade things that are very liquid that I can get filled within call it 5-10 cents of the midpoint. Is it possible to create a point and figure chart scan within Strategy Center? Yeah. So if you go to your advanced scan workbench, you go to the sample scan library, there are these point and figure patterns that you can build. So double top breakout's a pretty popular one, right? So you can see, okay, here's how you build a point and figure double top breakout here. You can add other filters to it. So for example, I look at things that are optionable, and you can just kind of tick our properties. You go to optionable, you click on add, and you can just add all of these different filters that you want, right? Run the scan, and now you have all the stocks that are optionable that have, generated a double top buy signal, right? I usually will also have, market cap restrictions on it, right, as well. So for example, market cap, I like to be greater than maybe 50, I think, is it 50 billion? I think is probably 150 billion. Let's run that. Let's see. I forget what the exact numbers that I use. Oh, that's still a pretty big list. That's 42 stocks, right? So that looks a lot more manageable, right? So there are 42 stocks that have generated a double top breakout on point and figure. That's at least 150 billion and is optionable. This gives me a good list of stocks to look at, probably even too much in my opinion, but this is a good list to run inside of our strategy center and basically say, okay, there are 42 stocks that have generated a point and figure buy signal. Which one gives me the best option strategy? This is a fantastic use case for the strategy center. What is the easiest strategy when you're a beginner? I get asked this question a lot. And the one strategy that I keep going back to, that I tell a lot of beginners to kind of try to master, is selling credit spreads. Selling credit spreads because it has limited risk, limited reward, which makes it suitable for anyone who's starting out, right? So you know exactly how much you can potentially make or lose before you get into a trade. So you really have no excuse to ever say, I lost too much money on a trade, because then the only person you can blame is yourself for trading too many contracts. A credit spread naturally has, at least 55 to 60% win rates, just if you do absolutely nothing other than just selling credit spreads, right? So meaning you don't try to time the markets, you don't try to do anything, you just sell credit spreads. You usually will have 55 to 60% winners, which is a good starting point for people to say, okay, I've got a starting point. Now I want to figure out how to get better at it, right? Versus other strategies, you might out of the box have 35, 40% win rates, which just is not, it's just mentally is harder to kind of motivate yourself to improve when you're starting off with kind of a lower base. So for those reasons, I generally tend to find that, if you had to pick one strategy to learn credit spreads first. And outside of that, cover calls, which is, everyone should be selling cover calls no matter what. Doesn't matter whether you are a beginner trader, advanced trader, selling cover calls is something everyone should be doing in your portfolio. Okay, with that covers the questions that I see here on my screen. Thank you so much, everyone, for your time here today. I hope that this is helpful in giving you a better understanding of what we have to offer here. Like I said, this is really game changing with regards to your options workflow. It has completely changed my way I trade options for the last 9 months since we started this partnership. It really should be saving you hours a week on finding the best options trades, and it also should give you the confidence that you're always finding the best options trades, and you're not just randomly stumbling upon good options trades from time to time, that every single time you trade that you are finding the best possible options trades. That was our goal when we set out to build this, and I think that we have built a really powerful set of tools, and you should be able to generate enough income on your first trade to cover at least the first month, if not, for those of you with larger portfolios, potentially even as much as a year's worth of your subscription on your first trade. With that, thank you so much. I hope you guys have a great trading day, and I'll see you guys next time on our next members only session. We will host a members only session. So if you are subscribed, you will get access to that session in the next few weeks, where I will walk you through a specific option strategy and how to use it using our tools. Thank you so much and have a great trading day. And thank you, Aubrey, for answering all the questions.